Zell. I'm the business website director for Healy Consultants Group in Singapore. I have with me today Kate Azizova. She's an accounting and tax manager who's based out of our Singapore office. Good morning, Kate.
Good morning, Mark. Thank you for the opportunity to share the knowledge that we have to our listeners.
No problem at all, Kate.
Yeah.
I believe that today you're going to be talking about the basic compliance requirements of a newly formed Singapore company. So I think that your inputs today are going to be in three different sections. The first one, I wonder if you could please start off by telling us a bit about the annual obligations that are imposed by Acra, which is the Accounting and Corporate Regulatory Authority in Singapore, please.
Okay. So when you basically incorporate the company, it is the same as in any country. You need to decide on your financial year end.
Okay.
So the requirements for financial year end in Singapore are quite broad. So you can choose basically any financial year end you would like. At the same time, despite of this being very wide, the most common financial year end for our clients, I think, is still 31st December, and the second one, I would say, is 31st of March. That being said, there is one restriction for the choosing of financial year end, is that your first financial year end should not be longer than 18 months.
Okay.
Yeah, actually, for the group of companies, we would also advise to consider your group structure when choosing financial year. For example, if you have a Singapore subsidiary and a foreign parent, it's always advisable to put those financial year end in line to consolidate, to facilitate preparing of consolidated financial statements.
Understood. Yep.
Yeah. So another things you need to know about the obligations of Singapore companies, that by default all Singapore companies are required to be audited and to lodge an appointment of an auditor with Acra. But the good news that there are some exemptions to this. Basically, for unlisted small and medium enterprise, we have two exemptions: it's small company exemption and dormant company exemption. One thing you need to understand about the small company exemption is it's not only the company, Singapore company itself needs to qualify for this exemption for all the quantity criteria, but also the group itself. So, for example, you cannot have a very large group, international group, and at the same time, small company in Singapore. In this case, most likely, this company, Singapore company, will not qualify for this exemption. So once we decided on the financial year end and whether the audit is required, we need to understand what are the filing requirements, right? So let's say we have financial year end 31st December, which is, as I said, the most common one. In this case, you would require to hold annual general meeting and prepare financial statements by the 30th of June. So in Singapore, your filing requirements with Acra depend on the financial year end. So the basic requirement is to have the filing within 6 months from the financial year end.
Okay.
So annual general meeting also can be dispensed if, for example, all shareholders agreed with this, that they will not have annual general meeting. And also there are some exemptions. In some cases, it cannot be held. So basically 1 month from the date of annual general meeting, you will need to submit annual return. So this is 7 months within the financial year end.
Okay, very good. That's excellent, Kate. Thank you so much for giving such a detailed and coherent analysis of the compliance requirements. I now think that you want to give us an overview of the tax obligations which are placed upon a Singapore company, right?
Yeah, that's right. So basically for corporate taxation, we have two main filings. It's estimated chargeable income, which is due within 3 months after financial year end, and it's annual tax return, which is due on November each year. So let me speak about both of this. So estimated chargeable income is just the preliminary results that you are submitting to the Inland Revenue Authority of Singapore, IRAS. Once you submit this filing within 1 month, IRAS will issue you notice of assessment. And based on this notice of assessment, you will require to pay tax to the Singapore authorities. There are also some exemptions to file estimated chargeable income. So this being said, it's your revenue should not exceed 5 million Singapore dollars, and you should have basically 0 ACI. So the next filing you would have, it will be a final tax return, which is due on November. And here you will provide like complete tax computation. And based on this, you will pay the final tax if it's different from your estimated chargeable income you submitted previously. Here, there is no exemptions. Every company must file. It's usually filed online with the IRAS system. Sometimes paper filing will be allowed, but for all our clients, we file it electronically now. So that's pretty much all about the corporate tax filing. But what is also important is to monitor other tax, whether you have obligation to register or obligation to inform IRAS about your revenue or something like this. For example, if you have revenue more than 1 million on Singapore dollars, you would require to consider if you are obligated to register for GST.
Okay. Understood. Kate, thank you very much for that. I believe that you're finally going to give us an example of a Singapore accounting and tax engagement that you recently handled for our firm. Is that correct?
Yeah, that would be a good opportunity to share how we usually work on this compliance. So let's say you have a financial year end of your company 31st of December. So before the financial year end, after the company incorporated and for the first financial year end that you decided, our renewal team will approach you and to get some basic information about what are your business plans, what are your business results, so we don't understand whether the company is dormant or active, or whether some, for example, GST filing would be required before the first financial year end, because it's required to needs to be done quarterly. So based on this, our renewal team will prepare a tailored invoice, which is designed for your company. After the invoice is paid, you will be transferred to basically my department, so it will be accounting and tax department. And good news here is that you will be assigned a personal manager who will be responsible for your engagement. And with this person, you can communicate about anything related to the engagement. We usually try to reply our clients within the same day, or we will at least send you email when you can expect reply from us. So you will never be alone with all those applications.
Yeah.
And we will always be in touch with you. So once all this settled, there are basically 2 options. Some clients engage us also for bookkeeping. And for bookkeeping engagements, we will require you to provide all the bank statements and all the invoices. So we would prepare as a trial balance for you. For those clients who do not engage us for bookkeeping engagements, we are usually asking to provide bank statements and also to provide us with trial balance. So based on this financial information, we could prepare the financial statement.